With the Reserve Bank of India raising interest rates almost every month over the last 1 year, is it time to celebrate? I think yes, it's time to celebrate if you're a senior citizen. But if you're a home loan owner, then I think it's important to take a minute to ponder. Between January 2022 and January 2023, the Reserve Bank of India has raised repo rates by about 2.5% at various intervals. This means most fixed deposit rates have gone up, but the unfortunate part is so has your loan rates. The system by which RBI is trying to control inflation means that significant amount of the banking industry's funds have been squeezed, and which is why banks are now forced to borrow at a much higher rate. Now what this means is they will pass on the higher rate on to you. Now typically when you take an example of somebody who is in a home loan kind of scenarios, interest rates going up hits them pretty hard. As an example, if you have a 20-year home loan which you have taken on a 50 lakh loan value, then you are used to a monthly EMI of say 38,000 change on a 7% interest earlier. Now over the last year, most of these loans would have moved up at least by 2 points to about 9% now, which means that you are effectively going to be paying about 44 or 45,000 rupees now on that same loan, which means you're paying 6,500 rupees every single month additionally. That's a lot of money. So what do you do? Everything has gone up in price. Your groceries are costlier, your lifestyle is costlier, and alas, your EMI is also costlier now. What does the common man do? Here are some of the things we believe one must do at these junctures. Find some money that you can in the short term to prepay your housing loan. So if you have a 50 lakh loan, find a way to put 5 lakhs from some other place, wherever you can, and then bring the loan component down to 45 lakhs. What does this do? This means that your EMI from 45,000 can move to about 40 or 41,000. Clearly, it saves you 5,000 rupees of money. If you don't have money lying around that you can close the loan with, and if you have a portfolio that's already invested in equity, these are good times to book some profit. Don't take all your money away. After all, we know that equity is the place for long-term returns. But a little profit taking is always doesn't hurt. I think it's a good idea to take a little profit out of equity markets. The profits that you've generated since the COVID times when markets have been up, these are good times to take those profits and prepay some of your home loan. Some value, to the extent that you're able to prepay, you will get a financial benefit in terms of a lower. Remember, home loans traditionally do not reduce your principal amount. At least in the initial part of the home loan, it doesn't reduce your principal amount. But using funds to prepay your principal will play a role in reducing the interest rate as well as provide you financial relief. So my ask of you as a home loan proponent is to make sure that you revisit your home loans and find ways to use some funds which you may have to prepay part of the amount at least. These are good times for one to kind of prepay home loans, especially from profits that you may have in your equity portfolios and your equity mutual fund portfolios. So that's the ask, and I'm sure in the long term you will benefit because interest rates eventually will go back down. At that point in time, you will find that you are left with a much smaller principal that you will need to pay overall. The other idea some of the people use when they start home loans, suppose your EMI is 30,000, also do a 10,000 rupee SIP in a mutual fund. It's a great way to close a home loan early. Let's say you took a 20-year loan with a 30,000 plus as your EMI. I know it is difficult, but if you're parallelly able to start a 10,000 rupee SIP as well and continue both of it, you will find that at the end of 10 years, you have a significant corpus you have created with that 10,000 rupee SIP. And you would be able to take that corpus out and close or prepay a significant amount of your home loan at that point in time. This can also be a great way for somebody to plan out their home loan EMIs. If you continue your home loan for a 20-year period, it's great for the bank, but I'm not sure it's so great for you. But if you can find ways to optimize your cash flow in a manner in which, say in a period of 10 or 12 years or maximum 15 years, you're able to close off your home loan, I think it'll be a great bet. So look at optimizing your home loans and all your loans, in fact, because these are times when interest rates are high and so is inflation.